Today in crypto, the final Ethereum 2.0 Phase 0 test net is about to launch in just a few hours, meaning that we could see the ETH 2.0 Phase 0 mainnet live by the end of the year. Now, I have maintained for a very long time that Ethereum will make insane returns for investors, especially in the long run. This video will lay out why I believe that Ethereum is primed for massive success and why I am still buying Ethereum at these prices. My name is Lark, and this is where you subscribe for all of the hottest and all of the latest happening out here in the wild, wild land of crypto. Also, a quick reminder that paying members of Wealth Mastery will get issue number 5 delivered to their inbox on Wednesday at 8 p.m. Eastern Time. This week, I will be talking about market cycles and all of the latest happening in DeFi. Jesse covers Aleph in his latest research report, uncovering the facts behind the hype. Forrest dives into Cardano and what the Shelley upgrade means for the ecosystem. Heidi examines the best gold-backed crypto tokens, and Rect Capital shares the latest technical analysis of Bitcoin and other key cryptocurrencies. Let me and my team save your time and help keep you ahead of the curve in this crazy, crazy market. All of that for less than $10 a week. There's a link down below where you can learn more. Okay, so let's start off this conversation by discussing the potential use cases for Ethereum. And of course, the big one that everyone's talking about at the moment is, of course, decentralized finance. We've been talking about that on the channel here for a very, very long time before the buzz did kick off around decentralized finance. But decentralized finance is incredibly important. It is opening the doors to incredible possibilities. Lending, borrowing, swapping, governance, crowdfunding, and like 50 other different use cases are all coming to DeFi. Decentralized finance could literally be the next big thing in financial technology. Will DeFi be multi-chain in the future? Yes, it will be. But Ethereum is and continues to be the front runner by just miles and miles. The nearest competitor is even close. And the applications right now trailblazing innovation on Ethereum, they are already delivering insanely powerful technology. We are witnessing the new financial infrastructure being built right now before our eyes, and it's very, very exciting, which is why people get so excited about what Ethereum is. Banks currently, they are facing an extinction level event in terms of disruption. They're either going to adapt or die. Now, we've even seen U.S. Treasury bonds-backed funds tokenized on Ethereum, just massive steps at the regulatory level as well. Now, yes, of course, you can go out and buy the application tokens like MakerDAO, and I do that, but also buying Ethereum directly, it's just a bet on the entire DeFi sector and that is going to take off. And while Ether is currently losing market share as collateral within the DeFi ecosystem to stablecoins, the actual total amount of Ethereum locked in DeFi continues to rise. And perhaps what is incredibly indicative of the success of decentralized finance is decentralized exchanges. They have just had another record month in terms of total volume, now actually surpassing many of the older centralized exchanges. These are all niches within DeFi that are experiencing parabolic growth right now as the sector continues to explode. And just have a look at the values. It tells you everything you need to know. $4 billion in decentralized finance volume, $4 billion locked in DeFi, and you realize we are just at the beginning. When we start to talk about total addressable market for all of decentralized finance is well over $1 quadrillion when we include real estate and derivatives into the mix. And while a lot of focus, of course, gets put on DeFi because it is a very, very exciting niche in the Ethereum ecosystem, let's remember too that there are around the corner use cases coming in. No one's even really talking about that much right now. Things like NFTs, gaming, invoices, art, all that stuff is important, as well as the next phase in the evolution of decentralized finance, stocks, bonds, real estate, that's all coming. But outside of decentralized finance, the other big area getting a lot of attention in Ethereum is the enterprise adoption arena, which is a very real and powerful niche and is growing all the time. As two quick examples, Unibright just announced that they are working with the Coca-Cola bottling supply chain in North America. That is massive, absolutely massive for Ethereum enterprise adoption. And recently, MakerDAO announced that they would support business invoices as collateral, allowing enterprises to thus free up locked capital in seconds by taking a decentralized loan using that invoice as collateral for it. It's a game changer for enterprises. Institutional interest is also number 2 for Ethereum, of course, behind Bitcoin. We see big players like Grayscale buying up huge amounts of Bitcoin, but also buying up huge amounts of Ethereum. But more importantly, institutions, they actually use Ethereum. They don't just buy and hold it, they're using the network. And Ethereum is getting really just even more and more enterprise players on board thanks to the Ethereum Enterprise Alliance, the Eminent Task Force, and the Baseline Protocol. Now, all 3 of these are powerful initiatives pushing Ethereum forward and getting more adoption for Ethereum. Anyway, those are just some of the fundamental factors that keep me buying Ethereum today. But at the technical level, there are some incredibly exciting developments coming for Ethereum. Now, one of the most interesting in terms of the long-term economic impact for Ethereum is EIP 1559, which on the one hand is going to make transaction fees hopefully a lot more predictable on Ethereum, but on the other hand is also going to be burning fees, which is game changing. That means that over time we could actually move into a situation of negative issuance for Ethereum. But that's just one piece of the puzzle. The real game starts when ETH 2.0 begins to actually roll out on the mainnet. There are 4 key upgrades coming. The first of these is sharding. Now, this is going to massively increase scalability at layer 1. Yes, I know we have got lots of great layer 2 scaling solutions for Ethereum. There's optimistic rollups and ZK rollups and Starkware and Matic and Raiden and Seller and Omise Go, all that stuff. They're all in the process of being deployed to applications and getting used with stablecoins and all that fun stuff. That's great. That's great. That's taking the pressure off of Ethereum to need to upgrade layer 1 at such a critical time. But sharding is coming, and when it does come, it will be massive in terms of scalability, and it's just a bonus then to have all those great layer 2 scaling solutions. The next big upgrade is WebAssembly, which will make applications built on Ethereum more web-friendly and thus should greatly decrease the gas intensiveness of Ethereum-based dApps, moving away from the Ethereum virtual machine. The next part of Ethereum 2.0 will be a massive decrease in issuance. Annual emission rates for Ether will drop to around 0.5%. Now, if demand for Ether stayed as a constant, which it won't, but let's just say that it does, then the price of Ethereum is going to have to increase because Ether is going to start becoming much rarer on the market. The Ethereum upgrade will essentially give Ether a lower inflation rate than Bitcoin until the end of the decade. And of course, all of that stuff is great. It's all very exciting. But what is really stirring up excitement with investors is the coming staking rewards for Ethereum. Now, staking will fundamentally change the economic incentives for Ethereum. You see, right now, miners, they mine Ethereum, and they are incentivized to dump it constantly on the market. They've got expensive electric bills to pay, they need to upgrade their equipment, and thus they need to sell constantly. Mining is a cash game, whereas stakers is totally different. They're incentivized to hodl, they're incentivized to compound their gains because the cost of staking is negligible. Thus, the incentive to hodl is very high. Most likely, the annual return for Ethereum will be somewhere between 3 and 5% a year, paid out, of course, in Ether. Earning interest via staking rewards in Ethereum, I see it as like owning a growth tech stock that also pays a dividend, which is pretty cool. I mean, seriously, think about it. People right now, they pay to earn less than 1% on Apple stocks, which has a $1.9 trillion market cap, compared to Ethereum, which has a $43 billion market cap. Ethereum is a rising star, game-changing piece of technology, could become the financial layer of the internet. Getting in now could be life-changing in a few years. If Ethereum gets to even half of the market cap of something like Apple. And I know we're comparing apples and oranges here. Forgive the pun. But anyway, Ether, if it gets up to $9,000 in that situation, now it currently costs $12,000 to buy 32 Ethereum. The number required, of course, is stake in ETH 2.0. But if Ethereum does indeed make it to the big leagues and gets half of the market cap of Apple, around $1 trillion, then that 32 ETH stake you're buying today would be worth $288,000. And if we assumed a 4% rate of return from staking, you'd be generating nearly $12,000 a year in passive income. Ethereum, when staking comes online, will turn into a serious yield instrument. I think in that situation, we're going to see a lot of institutional money get attracted into the ecosystem. Traditional money, it's largely still sleeping on the potential of assets like Ethereum, while they're sitting there plowing bunches of money into Apple stocks to get less than 1% a year. And like, hey, Apple, great company, but there's the opportunity right here for you to invest in something before it becomes the next Apple. And they're not going to be asleep on this forever. Now, me personally, I have been buying Ethereum weekly for all of 2020. I plan to continue doing this until Ethereum reaches $1,000. I might rethink my game plan then, but that is the plan. Now, look, is the success of Ethereum certain in the long run? No. Nothing in investing is certain. That's where the reward comes for taking the risks. Yes, there are challenges ahead. Changing the wheels on a car going 100 kilometers an hour down the motorway, it's a tough task, and that is exactly what Ethereum is doing right now. But with the massive backing of some of the world's biggest enterprises, with more developers than any other blockchain by far working on just the main chain alone, as well as thousands upon thousands of more developers at the application level, all innovating, huge liquidity, copious amounts of on and off ramps for fiat, as well as a very, very powerful network effect. I believe that Ethereum can and will overcome the challenges that it currently faces and will successfully pull off the ETH 2.0 upgrade in the coming years. If I didn't believe that, I sure as heck wouldn't keep buying Ether right now. But I do believe that, and I do keep buying. Anyway, those are my two gwei for the day. Your question: do you believe that Ethereum will one day have a market cap of over $1 trillion? Or will a competitor chain like Cardano come along and eat Ethereum's lunch? Let me know your opinion down below in the comment section. Thank you so much for watching today's video. Hope you're having a freaking awesome day wherever you are and whatever you're doing. I know you're out there keeping it classy. Long live the blockchain, and peace out till next time.